Hi Cryptos, it's Yuri from Hedgeinveast and the CrypToday. And today I want to talk with you about mostly about the WX Waves exchange against USDN. And currently we are looking for the 16 minutes charts, and you can see that it was two jumps during the last 2 days. Mostly 1 hour long, and after those jumps we have some kind of diffusion. I'm talking in the terms of the econophysics. So, and we can see that these jumps were relative with the rising of the turnover much more higher than that was before, that average turnover during the 1 hour periods. And it's not so highly viewable on the days, because on days we can find, just a second, the same signal, and we can see that the turnover on the days graphs is not rising so seriously, so it's higher than usual, but not so seriously higher. So it was not so strong jumps in interest. But we can see that that it's not so oftenly happening when the price is going last days. I mean that this year, at least, that the price were going higher than the upper Bollinger Bands with one standard deviation. And in the previous time we have seen that it was the move from 123 to approximately on the highest 234. So in this connection it was 11%, something like that. In this case we can expect that we can see that yesterday it was also the signal to buy Waves exchange WX in dollar terms, and it was the maximum price for yesterday 129.18 approximately. So it seems that its instrument is coin is much more interesting currently than maybe even Waves to USDN relationships, because we can see that in the Waves during the last 5 days we have the sideways market, and such a market is killing results of the trend following systems. In this connection, if you are trading the cryptos, the trend following systems are much more useful exactly for such assets as the Waves, for example. And in this connection it's very reasonable to trade the trend following systems, and in this connection avoiding of trades during the sideways market is also highly seriously improving the total results, the total performance of the trend following systems. So you need to have some filters which will show you that maybe in this situation it's better to avoid trading, because you see that you can trade trend following system by two major ways. The first one is to trade each signal which you are receiving during the long period of time, and the second one will be based mostly on the games theory principles, and sometimes they are talking us that one of the principles is to trade with the same probability as the signals are showing. So for example, if you have long-term performance with 60% of the profitable trades and 40% of the trades with losses, for you it's maybe reasonable to trade exactly in this such that relationship. So 60% of your signals must be traded and 40% of your signals must be not traded. And this connection, if you are going to trade trend following system, it's better for you on the first stage just to distribute your capital for the trend following when you are opening position on each signal, and for those one money management when you are trading just 60% of the signals, if the 60% is the probability of the profitable deal. So that is the idea for myself. But anyway, 127, it's not so high level of the Waves exchange to USDN, and in current situation we certainly can expect that the waves will stay in the sideways market with probability maybe 70%, but 30% probability of the trend in such a situation is making us a very good mathematical expectation, because you see that volatility was very low during the last at least we can see that from the 10th of February during the last months with half. And in this connection, the signals which we are receiving during such a period of time quite oftenly becoming very strong and very profitable. So it's the same situation as Nassim Taleb have told us in his example when he was asked what he expecting the higher probability of the sideways market or bearish market or bullish market, and he have answered that I'm expecting that the bullish market will stay with higher probability. But it was another question. But in such situation, you have a short position on on this market. Why do you have short position if you are expecting that the probability of the bullish market is higher than the bearish market? And he have expected that just the mathematical expectation is influencing for his decision seriously, because he is expecting that with the 70% probability market will rise for 1%, but with the 30% probability the market will fall for 5%, and this connection mathematical expectation from the bearish position were higher than from the bullish position. So sometimes the probability of the trading performance is not so seriously important, but relationships with the average expectation is much more highly important. So thank you very much for your attention. I will stop on this opinion. It's just opinion, and again I need to say you that it's not recommendations for yourself, it's just ideas, and it's just making it, it's just in the educational, in the, you know, that's in some cases scientific aims, but not with the aim to, you know, to give you any kind of recommendation. Thank you very much. Thanks a lot for your attention. I hope to see you on my channels. Bye bye.